Ever stare at a crisp $100 bill and wonder, who, exactly, is in charge of this whole money thing? It seems like magic, right? Pieces of paper with presidents' faces somehow hold incredible value. But behind the scenes, there's a fascinating network of institutions and regulations that keep the financial world spinning. The central bank, the big kahuna of money. Let's start with the central bank. Think of it as the Mount Everest of the financial system. In most countries, this is a powerful institution that sets the rules for the game. They control interest rates, print money, and oversee the entire banking system. The central bank's main job is to maintain price stability, which basically means keeping inflation in check. Imagine inflation as a runaway train. Prices skyrocket, savings lose value, and the whole economy goes haywire. The central bank uses its tools like interest rates to slow down that train and keep things running smoothly. But wait, there's more. The central bank also acts as a lender of last resort. When banks are facing a crisis and need a cash injection, the central bank steps in to prevent a domino effect that could cripple the entire financial system. The regulators, keeping the banks in line. Now, the central bank isn't the only one looking out for your money. Imagine a group of financial detectives. These are the regulators. They make sure banks play by the rules and protect consumers from shady practices. These regulatory bodies have a whole toolbox of measures. They can impose fines on banks that misbehave, require them to hold onto more capital as a safety net, and even shut them down in extreme cases. Their goal? To ensure a stable financial system where your money is safe and banks operate responsibly. The FDIC, or similar institution, your money's insurance policy. Let's face it, even with regulators, things can go wrong. Banks can fail. But fear not, grasshopper. This is where deposit insurance comes in, often provided by the FDIC, Federal Deposit Insurance Corporation, in the U.S. Think of deposit insurance as a safety net for your savings. Up to a certain limit, the government guarantees your money even if the bank you were using goes belly up. This helps prevent bank runs, where everyone rushes to withdraw their money at once, which can further cripple a struggling bank. Financial institutions, the everyday money movers. Now we're getting closer to your wallet. We've talked about the big guys, but the real action happens at the level of financial institutions, banks, credit unions, investment firms. These are the ones you interact with daily. Banks are like the workhorses of the financial system. They take your deposits, lend money to businesses and individuals, and offer a range of financial products like checking accounts, savings accounts, and loans. Credit unions are similar to banks, but they're owned by their members, not shareholders. This can sometimes lead to better rates and a more customer-focused approach. Investment firms, on the other hand, manage your investments. They help you buy and sell stocks, bonds, and other financial instruments to grow your wealth over time. The ever-evolving financial landscape. The world of money is constantly changing. New technologies like cryptocurrency and blockchain are shaking things up. Regulators are scrambling to adapt, and financial institutions are looking for new ways to serve their customers. The bottom line, you're not alone. So, who oversees your money? It's a team effort. From the central bank setting the stage to regulators keeping watch to your local bank providing everyday services, there's a whole network working behind the scenes to ensure your money is safe and sound. With that said, thanks for watching, and until next time.